Hi, I'm Catherine McQueen and welcome to IPO, the show where we take a look at the IPO world, past, present and future. It's been a tough market for IPOs over the past year or so, but one is seriously bucking the trends. Peloton Interactive is the latest in what we like to call health technology. The firm IPO'd at the end of September at a price of $27.18 and experienced some initial downside, with many commentators saying that it was just another dud tech firm with an inflated price-to-earnings ratio and far too big a valuation multiple. But of late, Peloton has experienced a tremendous rally from its low at approximately $21 to its current price of $34.45. Our thoughts as to why are based on two things. Firstly, the Peloton business model, and secondly, the move from cyclicals to defensives. You'll have noticed that in recent years, many firms are moving to a subscription-based model as part of their customer retention and increasing revenues. The Investing Channel team believe that this is absolutely key for investors these days. That's because if you have recurring revenue, as well as the ability to lock in a customer for a long period of time, you have an uplift in the lifetime value of your customer. So Peloton have done well here. They've catered to both the serious fitness addict, their target market, but also to fitness fad followers who are a byproduct of creating a great piece of technology. But back to the first point raised about the move from cyclicals to defensive stocks. Increasingly, investors are starting to worry about data coming out of the US, and with that comes a change in portfolio balancing. In this type of environment, we tend to find that investors move from cyclical stocks, which are sensitive to economic data, over to stocks which are not. Our thoughts here at the Investing Channel: Peloton has the potential to be a top defensive stock, since it is very much health-based and has a fantastic business model. If we have a look at their first earnings since the IPO, covering the first fiscal quarter of 2020, the company reported a net loss of $49.8 million, but doubled its quarterly revenue to $228 million. The firm also doubled its connected fitness subscribers, defined as a user with a paid subscription. They now boast more than 560,000 such members at the end of the first fiscal quarter, up from almost 277,000 a year ago. For the full year, Peloton expects revenue of $1.45 billion to $1.5 billion and projects to grow connected fitness subscribers from 885,000 to 895,000. Looking at the chart, obviously as a newly listed stock, we don't have much data to play with, but it's worth noting that the stock has surged into heavily oversold territory and is currently up some 22% since listing. Overall, this is a company that looks to be pedaling ahead of the pack, but remember to do your own due diligence before making an investment decision. Thanks and see you next time.